How to get a business loan with longer and shorter terms. I'm going to show you the whole workaround, how this is all put together into a package, showing you some examples. As you can see on the screen here, I'm going to dive right into this. But before I get started, if you're watching me on the live, please give me a hashtag live or a hashtag replay. Hopefully you had an amazing weekend. I sure did. It was impactful, fun, amazing overall. And just let me know where you guys are tuning in from. Anything fun happened over the weekend, cool stuff. Let's get right into this. Now, I have on screen what you're looking at is a document where I'm stating 100,000 to 30,000 in a business loan offer and 13 plus thousand in free exclusive bonuses breakdown. So what I'm going to do here is I'm going to dive right into some of these example offers and show you how people are getting these shorter terms, what you should do if you want a little long term, and what are some of the situations that you might find yourself in and what I deal with. This is what I deal with, guys, on a daily basis, like multiple amounts of offers on a daily basis. I'm not even joking. So I know what people will get a lot of the time before they go and start an application. And so I always get the workaround. Well, I wanted a longer term. I already have a loan. Can I get another 10 months or 4 months at it? I can't take something that's shorter. Or probably you're not even in the situation and you're somebody who's like, I can qualify for more than 12 to 24 months in a term. Usually it's 4 to 24 months. Let me move this over and I'll get back onto the screen. Usually it is between 4 to 24 months or 3 to 18 months is what's considered a shorter term loan. Or shorter term loan, usually you see from about 12 months to 18 months or 12 to 24 months, depending on the program / lenders. Anything underneath like 12 months up to about 11 months usually is considered a merchant cash advance, or it could be a hybrid merchant cash advance, which is what I strongly recommend, and it's a way better way to go for it. So, but I'm going to leave more information of this down below in the description so you guys can get started. Perhaps it isn't there right now, but when this is uploaded, it will be, so you can get access to it. And I'll try to leave some stuff in the comment section if you guys have not filled out some things like the questionnaire form that I recommend. Unannounced live. I know not many of you can be here. It's limited. Not like the other day where I had mentioned it and much more people ended up showing up. I'm sure you're busy. But what you need to understand before I dive deep into some of these examples, and this document is going to be similar to a video I did not too long ago with the addition of more examples and some more points, some more things in the market that have been changing. SBA idle stuff, still continuing, reconsideration, increases, appeals, declines. I've helped out a lot of people with templates, customize it, show them what they should put on their subject line, in their body, and so forth. Hi, Randy. Do you need a website for business cash flow? Do you mean to get a business loan? So to get a business loan, it depends on how you're looking at it. If you're building business credit, especially if you're going through a service that requires you not only to be pulled from your Fico, but your business credit side of the equation, checking for credit worthiness, I would say that your website is of a bigger importance. And a lot of these cases, like I just mentioned, within about 3 to 11 month time frame or term frame, excuse me, with these MCAs and hybrids, a lot of the times you just need to put your social media account, just one will be sufficient. So we could just take a look and see what's, the eligibility. And then if it's legitimate, like you're not just linking us to another site that has a different company. Like we don't want that to happen. So it just depends again on the service you go into. You don't always need one for the most cases. Now, I get people who go, hey, how do I get a business loan here? How do I do this? So I've released other videos on how to get a business loan with bad credit, good credit, and so forth. I won't get into the specifics of like all the little requirements, but I just want to dive into like what is expected when you have these funding details. What is the term? What are the rates? What is my overall repayment going to look like? And if it is legitimate, if it's going to help you, how you can move forward, and if it won't, how it cannot. I've had a lot of people last week who did not end up taking some offers, justified, but they were also in a way stating that, well, if I could do this and I'll do this. But the problems I see is you're going to see in a second here when I get back onto the share screen is a lot of the people who battle with what they can get, are those of you who have less than a 600 FICO credit score. I just see this so often, more than not, that those with at least a 550 to a 600 and more in some ways can be a little bit more flexible, but generally anything underneath a 600 for the most part, and especially if you don't have the revenue or the time in business, let's say you get presented with an offer, like it's going to be a battle for you. It will, because your cash flow perhaps isn't where it needs to be on a daily basis. So I dealt with so many people, and I'm dealing with some right now who are like, well, no, I can't do that. That's a $450 payment. No, a $300 payment. I can't do that. A $260 payment, 170, 190. And it's like a toss up. Like, hey, if you can't take this at the $280 payment, perhaps we can look to drop down how much you can take. And let's say we drop it down by 10,000 or so forth. This would be the repayment now. And then we have to talk about it and go through it. And then, that wouldn't even make sense. And it's because of cash flow problems. But again, if you're not here because you have those concerns, you still will get a lot of value out of this. Perhaps you've been in this situation. So back to the share screen. So what I want to touch upon, some quick points. End of month offers. We are already in April. That already passed. I usually try to come on live or release a video on the end of the month. And those of you who have offers, what you should do, and those of you who don't, what you're waiting for, perhaps. And those of you who have filled out a questionnaire form, it may have landed in your spam box. So I would go check. I did about 10 to 15 of them today, and I haven't gone through everybody. And I know people have questions, and I can't get to them every second. I did do a good time. Did put a good chunk of my time in the morning to respond back to some emails, but I couldn't do some of those clerical tasks. I have to get back to that in time. So you can accept at any time when it's the last day of the month, usually with a revised offer, or anyways, when it's not a revised offer, offices usually close around 3:30. So you want to be on top of that. You don't want to waste too much time. Otherwise, we're going to have to look at a month-to-date bank transaction report or your new month of bank statements. And I'm sure you don't want to have to go through that process again to start. I wouldn't say completely 100% from scratch, but for the most part, submitting your bank statements and then the process of underwriting, going through it again. Maybe it saves you a day or two, but it's still time. So battling for the right offer, does it exist? No. Not to everybody. Most of you, yes. If you're watching this and you're like, yeah, I've gotten SBA funding, I've gotten an EIDL loan. Listen, those of you watching who are like, I got an EIDL loan, and then they go and apply somewhere else, they think they should get just about what they got there, or they think they should get more. There's this misconception, and I'm sure you don't understand it because nobody's ever shared this with you, on how much you can qualify for a specific service. So I have people who go, well, I got an EIDL loan, I have 20 years of in debt, or I have to pay this all off, which benefits you or doesn't, but they think that we should go over here and we should be given the similar terms we were given over there. Well, it's going to be much harder, especially if you're over here using your funds for survival purposes as your primary use, but you come over here to the private lenders and you're like, well, I expect to have the same thing. That will never happen. There is a criteria to follow. This is not completely the wild, wild west. I have people who come to me and say, well, I thought I would have had a better experience over here. By what measurement and what means, I would ask people. But we have this misconception at the end of the day, and I've been there. It's not your fault. I know the problems. This weekend, I read some great books, some great stories. Robert Greene, Laws of Power, and so much more. I've already read them, went through the audiobooks, but I just had a refresher. And it's some interesting story about the battles and the battleship of the Navy and then a battleship of the Army. I won't get into the specifics of who, what, where, when, and why. But the battle over their territory, the battle to have power, the battle of politics considering the war. And what this has to do with you getting business funding is basically understanding, like, where is your positioning in this war, in this battle of yours? Are you on the left side? Are you on the right side? Are you somewhere in the middle? Left side meaning I just don't know what I'm going to do yet. I know I've been asked to go and get funding, but I'm not sure what I can do. you're on the complete right side of the spectrum where, yeah, you're like, I've done this before, or I know what to expect. Maybe you haven't gotten funding before, but I've spoken with multiple companies and maybe they haven't given you all the details. That's why a lot of people will come to me because they don't get everything. And so then there's people in the middle who are just like, I don't know whether to lean left or right. Should we take this approach? Should I stand up and speak? Because the fear of failure is on everybody's mind. And it was on mine when I was getting funding. I'm like, am I going to be able to make the repayments on all this? Anyways, I know that's not, I didn't go too depth into that, but let's go back into this document. So battling for the right offer, does it exist? Should you even battle? So in that quick story, I didn't get into even the synopsis of the whole thing, but if you're battling for the right offer, you have to ask yourself, does it even exist for me? It's not does it exist out there, because it does, but does it exist for me? I've had these problems myself when I was first getting started and getting funding, and I know how troublesome it can become to some of you guys. Actually, the majority, over 50, over 75%, I want to say, of people don't really understand what they're getting themselves into, and they don't understand the exact use of funds. Some people go, I had to consult with some people the other day. I really could have used the funds. I mean, my wife's leaving, and I don't want to get into the situation, but they thought because of getting those funds, it was going to repair something and it was going to help their marriage. You got to think twice about what you're doing. I've seen people go into the strain, and I've seen people get into the strangest situations. So really understand what you're doing when you get these funds and what the repercussions of them can be if you don't pay them back. So the person won't qualify for an MTA as he has two existing loans, which one he just got last month. His options are very limited and he has over leveraged and has low credit. We could potentially try to reduce the down payments by 30 to 35. Okay, so this was where I was talking about an equipment financing customer who never even got back to me. I don't know what their deal is. I don't know. Maybe they didn't like what was given to them. They didn't like me reaching out to them. I did it politely. I did it nicely. But like many business owners, I don't want to respond back. Or two, I just have to make an excuse because I didn't respond back to someone. That is not the way to approach it. So example one, here's one that I went over, and I want to put this in your memory in case you saw this already. But there's gonna be another one similar to this, and I'll show you some higher profiles on why people are getting the amount they're getting. So example one, the funding amount this person is asking for, $30,000, and I'm sure this looks familiar to those of you who filled out my questionnaire. Okay, credit, 540 Fico. That already for me is a red flag. When I see that, you know what I'm seeing when I hear that? But I see the revenue is sufficient. I see somebody who can justify taking the funds, but at the same time, somebody who's going to say, no, I don't want this because of the cost of financing. They're going to be saying that, this is too high of a repayment. Not necessarily may they look at just the rate, perhaps the term, because that kind of determines the amount of payback in a way too. But it's in the middle. It's you're in the middle of that battle, right? You're the Navy on the left, the Army on the right battling on land. You're just somewhere neutral in the middle. You're like just trying to get to shore, and it's hard to get there. You're bombing away over here with the lenders, and now you're in this huge predicament. And this is what I see every single day, guys. It's not like me bashing anything or anyone, but the behavior of it is what I want you guys to correct. That's what I'm trying to get. If you don't get this out of this video once you're done, it'll be continuously difficult for you to understand why you get the offer you're presented with. So time in business, years or months, let's say 1 year and 4 months, and I've changed the information to protect the people. I'm not giving out the full information here. Drop down. What is the use of funds for? Expansion. Business industry, construction. Business name, I did not put that. Did not want to share it, as well as I changed some of those numbers and the bits of the information. Any additional notes you'd like to share with me? This is where I give you a chance. And if you're questioning, where can I go and get this done? How do I submit a business loan questionnaire? I'm going to put it right now in the comment section, but it's simple. You fill out some very simple funding details where then it will land in my email inbox, where then I will analyze it, evaluate it, take my time to carefully review what you've submitted. It is not an application. And once I do, I will give you guys a proper response back via email on your best funding option and options on what you can qualify for. Very thorough, broken down into numbers. I've done plenty of them just before I got on here. That's what I finished doing, and I have many, many more. I have hundreds upon hundreds. I'm not even joking, you guys, just to put that out there. That just kind of I want you to hear that not because I'm like, oh, God, no. It's because one thing too is my time and my energy to put into these files. I'm doing that. But if you're not reciprocating it and I'm not seeing a response back, I'm not quite sure what you're trying to do. I have people from months and even years, and they go, well, I just wanted to get business funding. And I had an individual not too long ago who was upset, send me an email. Perhaps you're here watching. Well, stop sending me an email because you didn't give me the loan. I'm like, what do you mean I didn't give you the loan? You didn't even get started on it to begin with. And I didn't say that, but I was like in a very nice way of thinking, hey, literally my end of the sentence, not in these exact words, but I said, we didn't even have to get to this point where you're feeling frustrated. If you would have just listened and done as what was asked of you, this could have all been, I wouldn't even have received your email in the way, in the voice and the tonality you gave me. But because you decided not to take any kind of action, and also on top of that, not only one or multiple individuals, what I see is, well, if you don't get your standards met, if you don't get your, what I deserve to get in terms of terms and rates, that shuts you down. Why should that shut you down? So I just want to clarify that with so many people coming in and out, it's like, don't get upset over something you did not take action on. Don't get upset over something and raise your voice if you didn't happen to find the email, which was, I told you, and it comes to that point because it's building up over time. Maybe you've been in a situation where you've been shut down. You have finally somebody who's educating you on how this works, but at the same time, you're still not agreeing with it. It's a denial thing for a lot of people. And I've had an individual last week, I've had multiple actually in the same situation. It was similar situation to what I saw. Talking after hours, I had an appointment and I had multiple ones as well. And I'm looking at the offer they're receiving and I'm questioning those lender partners 110% for what he's getting for the use of funds at his credit score. He got that term. He got a pretty good term. And I'm like, well, I could only see it two ways, which I won't talk about here. But I'm very much questioning. I saw the site and I saw everything, and I was questioning, well, who are these lender partners? And they could be valid, but they could be doing things a stingy way. They could be doing ways that they just want to make the customer happy, so they go into an extent and go outside of maybe jurisdiction, or they go outside of what's the norm in the industry, just to satisfy a customer. And then what ends up happening is the over total cost of financing becomes a lot more. People can't pay things back. So I'm questioning these things with these offers. So if you have anything in mind, come to me. Ask me to revise an offer for you before you take it. Because there are scams. There are people out there who are duping others. They're telling people, come and apply here. Well, question, who are the lenders? Who's the lender I'm going through? And then that will give you a better answer. That will give you more clarity. Back into the screen now. So we're going through this one example at the moment. Here it says offer, and this is stuff that I get presented with me by the lenders, by the underwriters, et cetera, et cetera. Here it says offer. Credit is an issue here. So I knew that already. They knew that, but I spoke to the individual, and they knew they needed the use of funds because they needed to market, they needed to advertise, they needed to do this with inventory, so forth and so forth. So they were going to increase their bottom line and also keep it stable. So there was no issue there. Revenue sufficient. All right. Look, you see the revenue sufficient, and it's not, like I said, I've changed some numbers up here. But you can see why there's no battle in the middle of, hey, well, you're telling me I got to pay an extra $2,000. I got an extra $1,300 in lending closing costs. Wow. On top of that, and then I have people who are like, well, let's change the offer to this. I got to go check out with my accountant. I got to do this, which is fine. But it's become a battle where it's like, if you can't get what you want, it's so time consuming sometimes. And I like it. It's just, and it's always like either a learning experience, one, or it's not a lot of the time, but it's more of a repetitious thing. And it's me to get you to understand, even if we go through that process, which I enjoy, it's not like it's a bad thing. It's just, you're going to be battling for the lowest price at the end of the day. And that's what I let you guys know. So please review the offer below and let us know if you would like to move forward with this funding, or should we close your file? And so they got rates between 1.19, well, it's 1.19 to 1.49. for the service. The funding amount that they were given, $35,000. Term, 120 payments. That meaning you got 6 months. Now, why did you get 6 months? If anybody can answer that for me in the comment section, it's okay if you can't. I know not everybody's tuning in. Not everybody cares as much, or we're in a different time zone, or we're just so busy. I get that. But if it's an excuse that you're not paying attention because of something that just is way out there, then it has become a little bit difficult for people to understand truly like how this really works. And you should just be plugging in. Get on top of this so you guys understand. Like I reviewed so many offers from people just last week that weren't even coming through me, questioning them, and I saved people's lives, literally saved them from upon tens of thousands of dollars worth. And I'm looking at those lender partners and I'm looking at those companies and I'm going, the only way that they would have gone this was if this situation was this way. And now I'm playing this scenario against this one, either or. So I'm putting numbers down and I'm actually putting this information. Like, guys, I do this so much that if there's something you guys have a concern with, come to me. But understand what you're receiving is a lot of care and like a lot of love from somebody who doesn't want to see you hurt. Somebody who doesn't want to see you hurt personally, and then too in your business, because I've been there myself. And I never had somebody, to hold me over put me over the shoulder and say, hey, this is how this works. So back into the screen. So congrats. Okay, here's the offer we're given. And okay, so I put 30 there, but 35K here. I did a little bit of an adjustment when I first released the video. So we'll go with this. So term 120 payments. That is 6 months. And since nobody answered, I'll answer that because of their FICO credit score. We refer back to what we saw, a 540 FICO credit score. That, like anything usually underneath 600 in a FICO, will automatically give you about 4 to 6 months in a term. Now, it depends, again, on different lenders, but for the most part, that's what it is, bottom line. If it's something adjusted, then I might be questioning the company. I'm definitely questioning their integrity and what they're doing behind the scenes because they're just trying to please people so they can make money in their company. Maybe they don't make anything and they're like, well, they finally see somebody who comes through. They can't pass up on it. What do you expect? So think about that. We do things the most legitimate in the gold standard way. You're being taken care of. And if you don't like something, oh, well, I got 120 payments at 6 months about. And what we have to do is look at how do we fix our FICO credit score. If you come back to me and you say, okay, I improved my FICO, which I'm going to leave information for down below in the description, and you say, hey, Michael, I came back with a 610 FICO credit score. Okay, what can I be eligible for now if I hadn't showed you in the past? Well, let's revisit this again. And this time, we just cut your payment in not only more than half, more than 50% of your payment has severely gone down. So now, instead of making, a $400, $35 payment, you could have had a $235, $210 payment. Would that really have helped you, especially with cash flow and where you are in the business? So Monday through Friday, no weekends. This one specifically is $435. The lending closing fee is $1,245, very common. And then the payback here is $52,150. So what does that mean? Like, what was their actual rate that they were presented with? And let's look at it this way. So 35,000 times 1.49 is $52,150. So yes, they got the highest rate. And why? It had nothing to do with their revenue. I spoke to this individual. They understood what I said to them. Hey, your revenue is sufficient. It's in a great spot. Cash flow is sustainable. And there maybe been a little bit of a dip here. That's why we had to consider you maybe getting you a little bit less and your average perhaps. But the thing is, you got the offer you got. A lot of it because, yes, you have under 2 years of business. 2 years plus is usually desirable. That would help drop the rates, I believe so, from 1.49, perhaps 1.45. I have other people who have about the same FICO, 2+ years. They drop it down by about 4 to 5 points. Now, if this individual had about 2+, let's say 3+, and they had a FICO credit score of about 620, 630+, then the rates could have dropped substantially. They could have been at about a 1.4, 1.38, 1.37, etc. But between 1.30 to a 1.49. But because of the FICO credit score, this is an issue. 6 months, sometimes 7 months. If you're pushing 600 and above, 7 to 11 months, this person would have got very easily. 7 to 11 months with a 1 year in time in business. If they would have had sustainable 50,000 and above in revenue with 2+ years at a 700 plus FICO, 1.19 to a 1.30 in rate. So here's the offer they were presented. They were presented that because of what they had. So payback, they got the highest amount because of their FICO credit score. Less than 2 years in business. It's very risky. We're taking on a file here. And let me move this over, and I'm going to get into some of the examples really quickly, and we'll kind of end things here. So what you just saw from that example, it's not mind-blowing. It isn't a new discovery. It can be if the market changes. It has not recently. But what you have to come out of this video understanding, if you're in the situation, or if you're not, you're like, I speak with so many people who have a 700, 800 plus FICO, over 500,000 in a monthly revenue, not even in a year, okay? And it does not matter whether you're doing that amount or you're doing less than 100,000 or just over 100,000, over 200,000, 240,000. Everybody has a different category. But what everybody has in common, and I hear the disputes, all the time. That's why I lost a lot of people last week who didn't take an offer. And I knew it was going to happen. They got presented one. Other ones did not because of faulty stuff in the background. But they didn't take it because I can't do a $280 payment with this amount that I'm taking. This wouldn't help my cash flow. And then they go, well, let's try to readjust the offer and see if we can get you this amount. So then we come back, and I did this with multiple people. I can't do over 150. Can we try at least over underneath? No, it wouldn't work. At that point, we just have to lose it. We just can't. I can't continue. And it would be like, hey, like I spoke with many people last week. Hey, it's okay if you don't need funding, if you can't get the funding right now, and it's not like you really need it, but you know where to find me. Just keep enjoying my material. And when you're ready to come back, let's talk again. But I have so many people who are just bouncing like here and there. And if you're not in that situation yet, you maybe are a startup, this is something you have to be careful of. You have to be aware of it. The SBA loans, I've said this before, survival money, idle loans, survival money, primary use of funds. It can be secondary, but that's primary. And so many people, they think because the idle loans work this way, it should work the same when they go somewhere else. And that is not entirely the case. And it's not like I'm not fed up with this. I love seeing you guys coming through. So keep submitting those and keep raising your FICO. Establish business credit. Raise your business credit score. FICO, SBSS. So let's in time in business, revenue, and there's so much more that we have to look at. I look at the bank statements. I look through everything. So let me come back over here. And there's a big jump between somebody who gets a 35, 30K offer, 10,000, 20, as opposed to 100,000. And you have to understand why these people are getting over 100,000 and you're not. And I see files that come in every single time. I want to, like today, I work with some people who are wanting over $1 million and their revenue was sufficient, but they were going to get nowhere close to that because you can only get about 10 to 15% of your annual gross sales. And in a lot of cases, we would approve you for 75% to 200% of your monthly, your lowest. Sometimes when we take in consideration your average. So some underwriting guidelines for how to get a business loan with some of these shorter term loans / merchant cash advance hybrid one. Underwriting guidelines 1.19 to 1.30 rate. That's what we multiplied up here earlier, right? Because this person got a 1.49, 35,000 by 1.49. That's what you can get there. It's 2,150. So clients with greater revenue over 50,000 monthly, excellent FICO, that's a 700 and above, and been in business for 24 months. That's where I was emphasizing the 2+ years, right? As I said earlier. So this individual had the revenue. They did not have the time in business over 2+ years to get them between a 1.19 to a 1.30. They did not have this FICO score. It was really, really low. That's kind of why they got the offer they got, almost cut in half from what they were doing monthly. And let's look at this, a 1.31 to a 1.49 rate. That is a B to C to D paper lending client. So that's what we use, the lenders use, the underwriters use, the officers use to evaluate on these 3 to 18, 4 to 24 month terms on what you will get. And just because you think you need a longer term does not mean it. Even if you qualified for that, I had a lot of people last week who did not want it. They qualified for SBA 7A, but they didn't take it because I gave them the proper instructions of what they should do. Not false, not because it was for the better of my good. I always do what's best in your interest. So I spoke with someone specifically last week, and they were like, yeah, I can go and get the SBA 7A loan for this, but I would get funds much faster if I went here and I can make the payments. I don't have a cash flow problem. So what if it's a $6,000 plus payment per month, as opposed to, like, that's the thing, we're conditioned to the idle loans. We can pay at $300 or $1,000, and it's like, yeah, but when you're presented with something like $1,000, $2,000, $3,000 and above, that's a whole different story. And that's where you have to look at, because I've been in that position before. So let's go back into the screen here. Appreciate you guys' time. We're getting to the end here. So B Paper is a client with revenue above $20,000 monthly, a good FICO credit score, and that is a 625 plus specifically, and has been in business for 12 plus months, and that's 1+ years. So you're probably running some of this stuff in your mind. Great. If you're not, refer back to this, come back to it, because there's a lot. C Paper, it's a client with a 525 plus FICO credit scores. So those of you out there may have sufficient revenue, but you're in the 500 plus range. D Paper is a client with below 525 FICO. So you could see how our client just from earlier falls between a C Paper, because they don't have 625. So they're still getting rates that are 1.13, 1.31 to 1.49, but they're falling more in the 1.40 to the 1.49. Why? Because of their FICO. Maybe it isn't because of the time in business. Maybe it isn't because of the revenue, but because of your FICO, it severely determined the rate you were getting. So for those of you out there who are struggling to get loans that are like, oh, well, they're asking me to pay $7,000, $6,000. Well, here's the reasons why. It's not, again, to be angry or raise my voice in a way that I'm trying to sound negative. The reason why you're hearing my tonality come up is because I really want you guys to understand. If I came at this and I said, the interest rates are 450, and yeah, it's okay, you can get that. Yeah, let me go ahead and give you a pat on the back. What is that going to do, right? So I can talk like that, but I want you guys to really understand that I care about you guys and how passionate about helping each and every one of you in your business, whether you are a startup or a non-startup. So the rates that you get, they vary depending on your FICO. As we just said, I just like drilled it, and drilled it. Like I put the screw into the board, but that screw can't even screw in any deeper. I can't even unhook the screw because it is so drilled in there, I have to get it out another way. All right? FICO, time in business. Like we just went over just a little bit. Other credit issues such as past bankruptcies, if any, or the number of current delinquencies. Lender partners take into consideration your time in business and monthly monthly revenue dips when determining your rates. So why do they do that? Easily. Because if you have sufficient revenue on the category or the service of funding you're going to, but you have these revenue dips, however long ago it was, maybe it was within a month ago, 2, 3 months, however long we're looking at these bank statements, 4 to 6 plus months, for you looking at tax returns, possible SBA funding, what's going on with profits, what's going on with these bank statements that we have to say, hey, Gerald or Sally over here had a dip in revenue 2 months ago. This is a concern. So we have to take that into consideration to determine your rate. Now, if cash flow per month was more stable, you're looking at a lower rate. But if it's like in a wave, a transverse wave, we have to justify that. Hopefully this is coming together a little bit and you're really understanding. Sorry, I got a text message there from a client. But hopefully you're understanding how these are put together. Let's go through some more examples and finish this video. Now, Other issues that may impact the rate you get are a number of current funding positions, such as number of non-sufficient funds, number of negative bank days, number of inquiries on credit. Huge, huge, huge. You got to have minimal amounts from other lenders, daily balances, along with a few other factors. Here's another example. Now, this is a better one. Okay. Actually, let's see if I can do the other ones first. Let's do this one. We're going to go over here first. So here's another one. Funding amount. And this, when I say how to get a business loan with longer terms, that's the mindset people come in. I want 2+ years. What can I do to get that? Well, oh, this is what I got to do. I got to put collateral. I don't have collateral, or I do, but it's not sufficient, or it's not enough. It's not going to give me enough to what I need. But I want a lower rate. Yeah, but at the same time, it's like you won't qualify. And then 2, it's more expensive when you're going the private lending route. If you qualify for an SBA 7A, like I said, good, but that's not the only thing to look at. Like, yeah, I qualify. But is it really necessary? That's the biggest question of all. And I had to tell so many people that last week, like, they couldn't get it. Like, even after I explained it to them, they would come back to me and ask me, like, does it really, like, that how it goes? And I go, yes, that's how it goes. And it's not about lowering your monthly payment all the time. It's not about having the least amount you have to pay over a course of 30 years. The thing is, if you kept yourself in debt for that long amount of time, it doesn't make sense to you. Just because it feels comfortable, you got to get out of your comfort zone. You've been a business owner, you're out of your comfort zone. You're an entrepreneur, you're out of your comfort zone. Pay $6,000, $7,000, I can do it. I pay this thing off in 6 months, I pay it off in 8 months, 12 to 24 months. Boom, no need to worry. All right, I can come back and get more. I had a renewal just earlier. We couldn't get him the full, excuse me. We couldn't get him the full amount because his term wasn't up. But we said, hey, he reapplied and our lender got him more money. Not the most amount, but he understood. I just need an extra of this. Boom, done, deal, out. They didn't even have to speak with me. Honestly, they didn't even have to speak with me. He saw my emails, but he's just like, boom, 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 got in and out. And that's how we needed to get things done. So now let me get back into the share screen here. So here's a funding amount. $22,000, time in business, years or months. And what I want to let you guys know is please specify whether it is years or months. You can do it with the simple letter Y, the letter M, but don't just leave it as a number. Like, I have to go then looking for your, if I don't ask for your business name, even if I ask for your business name, I can't always go and determine how long you've been in business. I had to do that with multiple people today. I had to go in through some people's websites just to go to their contact form or towards the bottom to find what their time in business is. And that amount of time that I could have been spending that, I could have been already on a different file. So not bad, but understand that when it's asking for time in business, please specify for me, is it the number with the years? If there's nothing, put 0, credit. 560. You can also give me a range if you don't have the number. If you don't want to share it with me, I get it. You think it's going to be something I go and submit. I will not do that. This is confidential. I can never do that. I would kick myself in the foot, get it? My own foot, if I were to go do something like that. Business credit. This one has no business credit established. All right, that gives me already some few warning signs. So what I have to understand from this file is, what is the mindset of this individual? So funding amount they want is $22,000, 13 years. Oh, great. But then we come into the credit. Okay, no. So my bells are already ringing where I'm saying, yeah, I kind of know what they're getting. They're not going to go qualify for an SBA loan, even if they had business credit established. Traditional banking, out the window. No way. Secure term loan. Let's see, do they have collateral they want to put up? They won't even probably qualify because of the credit score right here. And no business credit established to check any kind of credit worthiness. So, yeah, but the rates will be higher, faster funding, yeah, but you don't have that. Possible state restrictions. Invoice financing factoring, does that make sense? No, not in this situation. Your monthly sales, okay, great. All right. I mean, not the best, but you're up there in a way we can get you between 75% to 200% of your monthly revenue, usually your lowest month, and we take into your average into consideration on what you're doing there. But we also have to look at, again, the lowest month, which is 19. Yeah, you might be doing 20 to 49,000. You might have had a bigger month. Like I said, if you had a month of 19,000 here, and then you had one of 25, you had one of 16 or 20,000, it's like it's fluctuating. It's like, what do we have to determine on that? But then we have to look at the lowest month. We don't always just look at the average. The average can more or less be the same. So drop down. What is their use of funds? COVID relief. So now I have another thing to note. Business industry, business name. I did not put those. I got those out of the way. Let's put over here. This is another, yeah, there's another one. So I want you to see that yet. So what I'm seeing from this file, without even, I already know what's going to happen. I'm not sure what'll happen with, like, when I look at the bank statements, that's a whole different thing. So when I look at bank statements, if necessary, I'll say to myself, what is the starting bank balance? What are the amount of deposits? What type of deposits? Not only the amount, like 40, 50,000, or how many times you're depositing in the account. What is your ending bank balance? If it ends up in a negative, that's not a good sign. If it ends up being minimal, that's another sign that we have to look at and say, well, can they end up even taking on these types of payments if we got them the most amount that we can get them? No. And then two, do they even qualify for that? No. That's just a range. The better fundability details you have, the better you will be positioned to get the most amount of funding. It's that simple, guys. There's nothing algorithmically. Okay, algorithmically can change. I don't want you guys to understand those numbers. I understand them, but not what you guys need to know about. So your monthly sales, that amount, average, drop down, COVID relief. So something tells me that cash flow may be a problem here. If they're looking for COVID relief, something tells me cash flow, something in those bank statements may not tell me that they can take on as much funding. That's why they're requesting little, right? They probably have an idea, or they're probably not. They probably have a kind of an understanding of what they need. But it also comes down to, will it be sufficient enough at the end of the day? So over here, so I'm kind of weary on this file, because I'm like, this is already, I could have, before I even got started, I knew this would have been a battle file. Like, again, the whole battle thing. On the left side of the equation, you're the Navy, and you're in the middle, you got to get to land. You're on the right side, you're this Army who's trying to meet the Navy in the middle. But you're like just trying to bomb away, unsure of where you're hitting. You see a fort, you see things here, but you're quite unsure of what the repercussion will be. How will they react to you? So you kind of have to have all of these, like the stars have to all align. So let's go back into this. COVID relief, I took that information out, and I'm not going to get into the specifics of this, but you can kind of already tell what I'm getting to. Like, what are they getting in terms of the term duration? And I can't show you that. I was going to copy and paste some of the stuff and show you, but I know what they got. And with this and more specific files, they were requesting, hey, well, I can't do this at this amount of repayment. Let's actually start less. So we came back, and it ended up not working, which is okay. But it's the thing about your standard and what you feel like you should qualify versus what you'll get. And if it makes sense, the benefit exceeds your repayment, you do it. And if it doesn't, let's end it there. Let's say, okay, we exhausted all our options. You can't qualify. This is just not a file that we're not going to take any more energy or time on. I just spoke with my underwriter. He didn't even respond back to me after what I said or something. Why? Because it's an understanding between him and I that we know we're not wasting our time or our energy on a file. I have to go do something else. I can't spend another word, another breath on a file that's just taking way too long. And it's just a battle of, hey, I'm going to go check out another offer here, or I'm going to go there. People who usually don't have the right FICO credit score will do that. So what I recommend, again, there's nothing wrong with you. It's just you got to work on the diagnosis. Stop fixing the symptoms of going applying here and there. If you come back later on and it's like, well, I have stronger revenue and I can take that type of a repayment now than I could have before, then we work on that and we say, yeah, let's do this. But if you're in the same position you are now in a year from now, it's like I told you, I try to help you with what you could fix. Like I pointed you to material. It just doesn't look like you're doing what is asked of you. So the offer just won't change. It's just more or less going to be the same. So I just want to make sure you have that. Oh, I do. Okay, great. I got more information. But you're not doing anything with that information. You're just going to sit on it. And it's fine. But at some point, I'm sure you want to get business funding. Now, let me get back into the share screen here. COVID relief, cash flow purposes. So that was a concern for this specific file. And again, I moved numbers around. So I already knew. Like I kind of had an idea of what was going to happen there. So I was well prepared. So funding amount, this is a different one. Again, I moved some numbers around. So 40,000. This is actually a really good file, guys. Like, let me move this over. And I'll try to close up before an hour, I promise. This is a really good file. I wouldn't say great, but just really good on the fact that they're asking for what they should be getting. Their monthly revenue, their average is where it needs to be. The type of industry, everything else, the FICO, and still we have to look at the bank statements, which I will get to soon. But what I'm seeing from face value is this is the files that I want to work on the most. And not because, oh, well, he doesn't want to work on my file. No, it's not like that. What I'm saying is I want to work on the files that, like, you're doing your part by trying to fix certain things, by trying to increase a certain part. So when it comes down to it, it's like we're not battling, right? That's a battle that we're going in the middle. We're not just like, well, I'm too far to the left. I don't know, I'm in the middle. No, I mean, you're like here. You're never going across that line, right? You're shooting bombs from a distance, but you're never getting into the land. You're never going into war. You're right here. You're just on a wall. So what do we need to do is get to this midpoint and then assess. Get to the midpoint and assess. But before you ever get there, don't just assume. Don't assume anything. When you get here is when you should evaluate it a little bit more. I already had a plan, but I'm going to just take a look. I'm going to observe. It's here if I went over there. And then I go over here, then that's how it works. But hypothesize and coming to conclusions, we gotta move those things around a bit. So let's come back to the share screen. Funding amount 40,000. Time in business, years or months, 5 years. Strong and strong. Credit 660. Very good. Okay, we're getting into a position where it's just above like that well. We're getting the good. We're moving up. All right. Business credit, no. Maybe a downfall. Perhaps the individual has something in their mind where I want an SBA loan. If that's the case, it'll be something to overcome. And if it is not, and they understand, okay, I don't have business credit established, but I can use the funds and I really need to get my hands on them, then they'll justify by moving forward. They won't be retaliating. They won't be asking so many questions. They won't be like trying to bar here and push there and here. And my goodness, it's like this is what's happening because of this. And when they have the details, some people just go at it and go at it. Oh my God. So business credit, no. Your monthly sales, 35,000. So what does that tell me? 35,000. You want 40,000? All right, we're already working with 75% to 200%. We know you qualify for that. Average monthly sales, good. 20K to 49K. Wow, doing well. Use of funds, working capital. So yeah, this person could use a lump sum for working capital, or perhaps they could do a line of credit. There's specific other services. But at face value, what I'm seeing on this file, let me move this over, and I'll quickly get to the end. This file, I already did. If you're similar in this position, you may know who you are. Again, I moved some numbers around, but I've already emailed you and a few other people who have similar details, and it's already landed in your email inbox. Please look through your promotions tab, social tab, look in your spam folder, but you should have been given an email. So this specific file that, again, I moved numbers around, got them a better rate, got them better terms. They fell between 7 to 11 months, perhaps not 12 to 24 months. And that is because the 700 FICO credit score is not there, as well as not 50,000 plus per month in revenue, as well as in the average amount. They have the time in business, but if they get a 700 FICO, then we can drop the rate even further. Possibly get them, if they didn't already get the longest 7 to 11 month time frame, we can push it about another month, we can push it about another 2 months, but you fall within that category for a reason. And the thing is, you have to build the relationship up with not only myself, because I will take you a long ways. Since I said, again, I have these relationships with these lenders and these underwriters that I can take you to, and I go, well, this is what's going to happen. You didn't like this? I helped out an individual the other week. They didn't want the offer. Let's revisit it. Let me go to my lender here. Okay. Once we revise the offer, though, we can't get you anything more. Just know that we can't come back on the previous offer you had. And so once you're given that, you have to sit down. Maybe you have to sit down with your accountant, or it's yourself who deals with it, wherever it is. And you say, can I take this blow? Can I take this pressure on? And if it's too much, you will never move past that again unless you like I tell people, if for one, if you would have just if you would have your credit score a little bit higher, your revenue is fine. All of this one could have been avoided, but then it's not about me avoiding something. I like to deal with it. The thing is, it could have been all avoided if we were just to raise this up a little bit. I got you the underwriting details. You saw that email. I showed you the terms. I showed you the rates. What are the expectations of these other ones that are 2+, 5+ years of business or 5+ years of terms, why they work, why they don't work. But it's because we're so hypered. We're like, just send me the application. I just want to get started. That's what I have a lot of people do. Like today I had multiple individuals who I'm like, oh, wait, great. A new applicant came in. I went to go look at it and I'm like, why did they go and apply that? They don't even have the revenue. What's going on? I don't know what they skipped over because I gave them the information. But it's don't be so desperate to go and get money. So much so that you're impatient. So you go start that application and you're like, well, I didn't know. I wasn't told. You were for the most part. But it's just a thing of like, I just need to get it done. So just take some time. Now let me come back to the share screen. So this individual, better rates. Yes, they fell between a 1.30 to a 1.49, but they're getting usually less than a 1.40 for the most part. And we also have to look at some background stuff that I still have to go through, but a better rate, better terms, perhaps not the 6 months, 4 to 6 months. This person could be getting 7 to 11 months. And it also has to make sense with their use of funds. It's not because you want to feel more comfortable that if it's 7 to 11 months, I need the 11 months. No, it has to also make sense and align with what you're trying to do. It's not just, I get 7 to 11 months, I want to get the 11th month. No, it has to make sense. So that's one file. Now, here is another one. I'm gonna try to see if I can finish this. So funding amount, and I had multiple people on this last week. Funding amount requesting 300,000. Okay. Time in business, we'll say 8 years, going strong. Okay, that is. When I see those first two things, I'm already thinking a few factors. Now, credit, usually we mean Fico is what we assess at, and then we can assess with a specific service, you don't have to always use business credit. So credit, we can assess that being a 780 Fico. We're like, oh, okay. Now, what is business credit? Whether it is established or not, I mean, yeah, I can open up some doors. We'll say yes. Okay, great. Okay, your monthly sales. So you guys can see this on the screen. If not, one of you guys, please let me know. Monthly sales, they're doing, let's see, 300,000. 300,000 a month, okay? Now, we have the average. Sorry, guys, I spent a lot of time doing numbers in my day. So their average monthly sales are doing, let's just put doing upwards of 300,000, 250,000 and above, right? Just to put it in that context. I'm going to put an actual range. But here, their use of funds is expansion, great. And then I have in a section here, the additional notes. Sometimes people will write something here, sometimes it's not needed. But what I need to know is like, what exact use of funds are you going to be using it for? Like, I need to determine if it's going to be a shorter term, a medium, or a longer term that you need, and if it's even doable. Oh, so additional funds, marketing, advertising, inventory. I know some of these, I'm just writing them quick. I need to use it for maybe multiple purposes. I need to use it for payroll now. Well, 75% of that I'm using for the growth and expansion of my business. 25% of that I'm using it for like payroll and a few other things, right? See how that comes together? And so when I see something like that and I go, well, it's not being used for exactly purchasing a new building, or it's not relocating, not perhaps for another existing or new business. It's not for putting up a new warehouse or putting tile or new roof or putting all these little pieces together of it that would actually take you 2+ years to finish. Purchasing an existing business or perhaps some other purposes for inventory that would require that. So I spoke with this certain individual, and I've had multiple that could justify doing more time. But with a profile that looks like that, guess what? The doors to the gate, come on in. They just open up, and what you see is everything. Is like the land, the battle. You're seeing it from a bird's eye view. You can finally see where your enemies, your friends, or foes are at, and you're seeing how you can get to the other side of that without a struggle. And that's because I'm presenting it to you. So this certain file, sure, we're going to look at it and say, do you have enough business credit established? A 155 liquid credit. We're looking at FICO SPSS scores to determine that for the most part, as well as your credit in FICO. Yes, it's strong up there. How many inquiries? How much is your utilization? What do you have going on there? Time in business is strong enough. Okay, great. What the requirements are, we'll get you that. But it also has to make sense. Can you go? Do you want to go through the SBA and wait that amount of time? Take on that amount of debt? Do you want to wait? Do you really need the funds now? Does it even make sense for the amount you're going to get through the SBA? This is not the IDLE. This is like SBA 7A and so forth. As opposed to going to another service, like one of these 4 to 24 month that I just showed to you guys. So this is where the longer and the shorter term kind of comes into play. So this specific individual, and there's multiple ones like this, guys, where they're like falling in the 12 to 24 month range. A profile like this can get 18 months, which is almost rare, but it happens a lot, to be honest. So 18 months, spectacular. Got a 1.23 rate. And their payback, however big it was or not, did not matter. Who cares if it were like 4,000, 5,000, 8,000, 12,000 a month to get the 600,000 that they wanted, or let's say 300,000 that they wanted. But if this were, let's change this over here. You guys can't see it. 1 second. I'll close up here. 600K, and they got that whole 600K that they were asking for. But they didn't want that because they had to supply extra documentation over 100 or over 150,000. So what did we do? We can get them the minimum of 150 or sometimes 100,000 without supplying anything more than about 3 to 4 or 3 months, sometimes 3 to 6 months of bank statements, voided check, copy of your driver's license, in and out like that. And guess what? They're going to come back and get more funding if they want. They can come back if they want the full 600K over time. Let's do it this way. But that's how this game works. All right. So just underneath an hour. I appreciate each and every one of your guys' time. I know it is much valuable, and your energy is as well as mine. And at the end of the day, just to recap, understand that there are these terms, there are these rates put in place for these shorter term loans as well as longer term loans. But just because they look good does not mean you're actually going to be getting them. And just because you want something doesn't mean you're going to get it. Very quickly, I was looking at my tabs. So some of the terms here: A and B paper, weekly, daily repayment, 12 to 24 months. You must have 50,000 in monthly revenue, 675 plus FICO credit score, 1+ years in business. C paper, D paper, and so forth. I won't go into it in depth, but this is just some of the criteria that I look at, that we have to look at and assess whether it is important for you to get business funding. Now, I'm going to go ahead and move away from this share screen. Actually, I wanted to show you guys this very quickly, and then we'll close up. So it looks like we'll probably get to an hour. And I will be on TikTok, guys, in a moment. So if you guys want to find me, I'll be there. Actually, what I'm going to do is I'm going to leave it at that. Okay. So I don't want to go through the process of showing you where you guys can go get started. All that would be down below in the description for you guys. So just keep in mind what I've said. I gave you guys some examples. I didn't fully show you guys the rates, underwriting guidelines, or the terms, and so forth. But understand this, that just prepare yourself. You don't have to have the best FICO. You don't always have to have the best revenue, but you just have to understand what you're getting and why you're getting it. And it's so much back and forth sometimes it's better to just go and say, well, do you really need to use these funds? Well, come back to me if you pick up your FICO credit score, get it to at least a 600 plus. Let's come back, revise this, and see what we can do. But it's too much of a toss up. So that'll be everything from me. Look for everything down below in the description, the questionnaire form, all of the resources, where to go get started, and so forth. And again, I appreciate you guys' time. I very much so do. Thank you all. Take care.